Welcome to my course. In this section, we'll be covering the different types of candles that form, their key features, and how they form. Now, let's talk about a bullish expansion candle. How does a bullish expansion candle form? Well, ideally, this candle opens low, prints a reversal from a key level, and expands away, closing near the highs. A negative condition is when this candle opens and creates a significant high first, as there's not enough time in the candle to then create a low and expect expansion. How do bearish expansion candles form? Ideally, the candle opens high first, puts in a reversal from a key level, and expands away, closing near the lows. A negative condition is when the candle opens and creates a significant low first, as there's not enough time in the candle to create a high and expand away. Here is an example of expansion candles. Expansion candles usually have small opposing runs or wicks, which allows the candle to expand and close near the highs. This is a positive condition as it supports expansion and can be used as a high probability filter for identifying expansion opportunities. Here are examples of reversal or indecision candles. These candles typically have large wicks, right? And small bodies that close near the opening price. This is because the opposing run doesn't support expansion. This is a candle that we do not want to participate within. We can use this as a filter for avoiding low probability conditions. Here we also see a reversal or indecision candle. The way this candle forms is different and can be traded following a specific protocol that you will learn later on in the course. True expansion occurs when all time frames are aligned in one direction. The goal of this section is to show you the process I use to achieve this. Once a key level is hit and the anticipated high of day or low of day is formed, aim to align multiple time frame expansion candles in the same direction. If the candle you're trading within does not support expansion, simply wait for the next candle's open to confirm expansion candle alignment. Now here is an example of multiple time frames trading in the same direction. Now all we ask ourselves, does the low of the day form from a key level? Yes, this swing low. Now we ask ourselves, does the daily expansion candle support expansion? Yes, right? We have this small opposing run. Then we go to the next largest time frame, which is the 4-hour. So does this 4-hour candle support expansion away from these hourly opposing candles? No, right? So this is when we simply wait for the next 4-hour open to align itself. We confirm it with a lower time frame reversal, and then we trade hourly expansion candles within a 4-hour expansion candle in the daily expansion candle, aligning 3 time frames in one direction. The goal of this section is to show how I align a lower time frame model with a higher time frame expansion candle. If the current higher time frame candle does not support expansion, wait for the next higher time frame candle to open and confirm expansion. Once the higher time frame candle is aligned, price is more likely to move away from the key level. Here, we have a lower time frame hourly internal to external move, supported by a higher time frame 4-hour expansion candle. Here, we have a lower time frame 1-hour or 4-hour external to internal move, supported by a higher time frame bearish daily expansion candle. Here we have a lower time frame daily range high purge, reversal, and expansion into the opposing side of the range, supported by a higher time frame weekly or monthly expansion candle. These are the various reversal formations I look for on the daily and 4-hour time frame. I look for 4-hour swing formations to form from 1-hour or 4-hour key levels to create the high of day or low of day. Then I trade 4-hour expansion candles away from the high of day or low of day, as my goal is to align expansion candles in the same direction. Within this reversal type, we see candle 1 hits a key level, candle 2 reverses up the previous candle's low, and forms a reversal visibly shown by the higher time frame candle closure. As we see, this candle 2 fails to close below candle 1's low, which is a reversal signature. We do not look to trade within this candle, as our goal is to trade within expansion candles. This opposing run is a negative condition because it does not support expansion. We simply wait for candle 3 to open to align ourselves with expansion. Within this reversal type, candle 1 will hit a key level, candle 2 will reverse off the previous candle's high or low and expand away, which is supported by the opposing run size. We do not have to wait for this candle 2 closure as it supports expansion. We can trade within this candle using lower time frame reversal confirmation. Within this reversal type, candle 2 will hit a key level, but does not close a reversal candle, which is visibly shown by the higher time frame candle closure. As you see, this candle 2 cannot close back within candle 1's range, but on the lower time frame, we may have a reversal. If there is no reversal in candle 2, candle 3 will confirm reversal and expand away without taking out candle 2's high or low. Here is an example of a reversal into expansion candle. This will be a 4-hour or daily chart, as this is the only time we look for reversal into expansion candles. Here we have an expansion candle closure within a key level. Candle 2 forms a small opposing run reversing off of candle 1's low. This small wick supports reversal into expansion within the same candle. Within a bullish London reversal, ideally the daily candle opens low first, creating a small opposing run or wick, as this supports a bullish daily expansion candle. Ideally, the previous session Asia either consolidates or retraces, as this is a continuation signature because the market does not reverse from a consolidation or retracement. We want London to engage a 1-hour or higher PD array within the hours of 2 a.m. to 5 a.m. to form the daily low, to then expand away within a 2 a.m. 4-hour expansion candle. Now we will be going over New York continuation. In a New York continuation between the hours of 8 a.m. and 10 a.m., we will trade within the 6 a.m. 4-hour expansion candle, moving away from the low of the day that was created in the previous sessions. Entries will be paired with the volatility drivers to support continuation towards open objectives. In a New York continuation between the hours of 10 a.m. and 12 p.m., we will trade within the 10 a.m. 4-hour expansion candle, moving away from the low of day that was created in the previous sessions, trading towards open objectives. Here is an example of a 10 a.m. continuation where the daily profile is a London reversal. And here is a 10 a.m. continuation where the daily profile is a New York reversal. In a 6 a.m. 4-hour New York reversal, we will be trading within the hours of 8 a.m. to 10 a.m., pairing reversal and continuation signatures with drivers away from 1-hour and 4-hour key levels that form the high of day or low of day. In order to participate within a 6 a.m. 4-hour New York reversal, the 6 a.m. 4-hour candle must support expansion. If not, we simply wait for 10 a.m. to open to see continuation and align expansion. In a 10 a.m. 4-hour New York reversal, we will be trading within the hours of 10 a.m. to 12 p.m., trading away from 1-hour or 4-hour key levels that form the high of day or low of day. In order to participate within the 10 a.m. 4-hour New York reversal, the 10 a.m. 4-hour candle must support expansion. If not, we simply skip the day. Here, I'll be demonstrating how I profile the 4-hour chart using 4-hour swing points from key levels that define the high of day and low of day. I trade 4-hour expansion candles away from the high of day and low of day. These examples focus on 4-hour key levels, but it's important to remember that daily reversals can be formed from 1-hour key levels with the same reversal formations. Now, here is an example of a London reversal visualized on the 4-hour chart from 4-hour key levels. Now, it's important for every single reversal profile that we use is the candle that you're trading within is always going to be a reversal into expansion candle. This is what makes it valid to actually trade because it supports expansion, right? If this candle doesn't support expansion, we just seek the next candle for continuation. Now here we see candle 1 being Asia session, hits this fair value gap, we print a reversal off of candle 1's low, supported by the small wick which allows the candle to expand. Here we see the same thing where we have a swing point, Asia session hits this low, and we reverse off the previous candle's low. Here is an example of a 4-hour opposing candle where Asia session hits this candle. Now, again, it will always be a reversal into expansion candle, as this can't be a London reversal if London isn't creating the low of the day. Here is an example of a 6 a.m. New York continuation where London puts the low of the day in from a 4-hour key level. So as you see, we obviously have a reversal visible by the candle closure on the higher time frame. So this is very obviously a continuation that we will be seeking within the 6 a.m. candle. Here we have a swing point low again, obvious reversal within the London session. So we will be seeking near continuation, right, with that small opposing run on all these examples, right, supporting expansion for continuation. Here is an example where London hits a key level but doesn't reverse, right? This closure doesn't represent a reversal. So you will either have a lower time frame reversal within this candle, or early on within this candle, it will confirm a reversal, right? You'll have that small opposing run supporting expansion to open objectives. Here is a 6 a.m. reversal. So just like London reversal, you have to take out the previous candle's low, right? So here is a fair value gap where London candle 1 hits this low, we reverse off of the candle's low, small opposing run that supports reversal into expansion towards session highs, right? The way this daily candle opens, low first, supports a daily bullish candle. Here we have equal lows where the previous sessions don't do anything, and candle 2 is the one that prints the reversal and hits the key level, right? You have that small opposing run, right, that supports reversal into expansion. That's exactly what we want to see. Here we see again, 2 a.m. doesn't print a reversal, but it does hit the key level. Here, there's no reversal on the lower time frames, so we see candle 1's low as a reversal, supported by that small opposing run, which supports expansion. Here is a 10 a.m. New York reversal example. Over here, we have a New York reversal where candle 1 hits this fair value gap. Again, the candle closure doesn't represent a reversal, so on the lower time frame, we will either have a reversal, and then we have a 10 a.m. continuation, or 10 a.m. can confirm the reversal, supported by this small opposing run, right, for continuation. Here, you have another New York reversal, obvious reversal, shown by this closure, right? So we just need to have this small opposing run to align with the continuation and expansion, right? So over here, we have a London reversal from an opposing candle on the 4-hour chart. 6 a.m. and 10 a.m. continuation, right? We have a swing point formed. So candle 4 continuation supported by that small opposing run. So here is 10 a.m. reversal, the last profile. Here we see the previous 2 sessions do not create a reversal. Here we have 6 a.m. candle hitting a key level and 10 a.m. reversing off of candle 1's low. Again, reversal into expansion candle supported by this small wick. If this doesn't have a small wick and we don't reverse in 10 a.m., it doesn't support expansion, we do not trade this day. Here we are reversing off of a 4-hour swing point low. 6 a.m. candle hits this key level, 10 a.m. candle reverses off the low, supports expansion with a small wick. Here we see the previous sessions retrace into this opposing candle, and again we reverse with a small wick off of candle 1's low, supporting expansion. So let's get into my ideal profile. The ideal profile is when the low of day or daily wick is formed from manipulation on the hourly or 4-hour chart, ideally paired with an SMT, which forms a protected swing intra-candle for the market to expand away from, creating the body of the candle. The manipulation will be supported by the daily and 4-hour small opposing run, which supports expansion away from the manipulation. Now let's pair a manipulation with the profile. Here is a London reversal where we see Asia consolidates, creating a 1 hour or 4 hour range or swing point to reverse from. London session manipulates into this level, reversing the daily candle, ideally paired with SMT. We will be trading the 2 a.m. 4-hour expansion candle away from this manipulation. Here is a New York reversal where the previous sessions open low, consolidating or retracing, creating a 1 hour or 4-hour range or swing point to reverse from. New York will manipulate into this level, using it to reverse the daily candle paired with SMT and a driver. We will be trading the 6 a.m. or 10 a.m. 4-hour expansion candle away from this manipulation. Here we are going to be going over the specific protocol to trading reversal candles that must be followed. So how does a reversal candle form? Specifically a bullish reversal candle in this example. Well, the candle must open low first, right? Creating the high of the day early on in the candle, leaving enough time in the day to expand back within the range. Let's talk about targets. So we know that this candle is not likely to close with a large body, so we must adjust to that. We know it's likely to either close, maybe slightly above the daily open or maybe below the open, creating that small body. So you have to either target back within the daily range in the form of session highs or at the current day high in the form of session highs, right? This here is leaving behind low resistance liquidity, so it's more likely for price to actually expand towards these objectives, right? Now here, the low of the day must be formed from an hourly or 4-hour key level, and the low of the day must be formed prior to 10 a.m., leaving enough time in the candle to expand back within the range or back within the current day's high. Here we pair the reversal with SMT or a driver for higher confluence. Over here we see this is exactly how we expect the daily candle to form. We do not expect much expansion past the daily open as the wick size does not support it. Now to trade a reversal candle, we're going to be trading expansion candle back to the daily open or back within the candle's range from 1 hour or 4-hour key levels. So now let's talk about targets and how I position myself within price. So here is an example of aligning a lower time frame model in drawn liquidity with a higher time frame drawn liquidity. Now, it is best and ideal to position yourself within and before we take out the hourly draw, right? So here we take out a range low, we manipulate it, so we're expecting expansion into this range high. So it is ideal that you get in before we take out this hourly draw, and then you can hold runners to the daily drawn liquidity, right? So the reason why we don't enter after we take out these objectives is because we do not want to get caught in a new phase of price such as consolidation or retracement, because those are not favorable conditions, right? So as you see here, we expand into this hourly drawn liquidity. If we want to re-enter the market for continuation, we're simply going to wait for an hourly or 4-hour key level or model to be engaged for continuation, right? So here we see we run out this short-term low and discount of this range. Here we have an ideal swing formation, so ideally I want to be involved before we take out this hourly draw and hold runners into the higher time frame drawn liquidity. In a bullish candle, the market opens low, forms a low from a key level, leaving session highs behind as target. The ideal position is below the daily open, to be positioned within the daily wick. When the market trades into a key level, session highs should be available to targets. This increases the probability of the daily candle expanding, as there is no protected high to trade away from, making it the targets. So as you see, the candle opens low, leaving behind session highs or low resistance liquidity in the form of consolidation or retracement. As mentioned previously in the course, this is a continuation signature. The market does not reverse from consolidation or retracement. So when the candle opens low, this already supports a bullish daily candle. So when we create a reversal From a key level paired with SMT and a driver, this heightens the probability significantly. Now let's go over the 3 models that I use. In this example, we're going to be going over internal to external, internal being the reversal point, external being the target. Here is an external to internal, external being the reversal point, internal being the target. Here is an example of high resistance to low resistance or order pairing ranges, where we take out a range low or a swing low, reverse or manipulate and expand into the opposing side of the range or target failure swings. Talk about the continuation entry sequence. This simply means the previous 4-hour candle hit a key level to form the low of day or high of day and created a lower time frame reversal confirmed by an hourly or 30-minute T-shaped fractal model. The new 4-hour candle will open up within an already existing T-shaped fractal model and expand away from the key level for continuation. Now, this will often happen within the 6 a.m. and 10 a.m. New York continuation, as the previous candles has already hit a key level and reversed, forming the higher low of the day. Let's go with this example of a New York reversal where 6 a.m. forms the low of the day. 10 a.m. will open up with an already existing fractal model that the 6 a.m. candle printed, or we can do it like this. 2 a.m. forms the low of the day, forms a lower time frame reversal, and 6 a.m. opens up within an already existing fractal model for continuation. Now let's talk about the reversal entry sequence. This simply means the current 4-hour candle's higher low is formed from a 30-minute or hourly T-shaped fractal model that reverses from a key level. This reversal sequence can be used to frame 4-hour reversal into expansion candles or continuation expansion candles. So what we have here is a reversal into expansion candle. We can imagine this being a London reversal or 6 a.m. New York reversal or 10 a.m. New York reversal. And the low of the day is formed from a key level. The low of the 4-hour is formed from an hourly and a 30-minute T-shaped fractal model. Here we can imagine this as a continuation entry, a 6 a.m. New York continuation or a 10 a.m. New York continuation, where the low of the 4-hour candle is created and confirmed by a lower time frame 30-minute or 1-hour T-shaped fractal model. Now let's talk about the aligned entry sequence. This simply means that the current 4-hour candle has already aligned itself with expansion. The lower time frame T-shaped fractal model is used for continuation to realign expansion candles in the same direction. So as we see here, this is the 30-minute chart. We see that the current 4-hour candle is already expanded, already supported by the small opposing run. So we're just waiting for a key level for continuation. As we see, these two candles are not aligned bullishly. So what we're going to wait for is a valid fractal model to align ourselves with expansion. Here we get a valid C2 closure within a key level. So now we're just waiting for candle 3 to open up to align itself with the 4-hour expansion candle. At this point, we are now aligning expansion candles in the same direction. GXT flowchart. This will help you go from an idea all the way down to entry. So let's start with the idea and walk through the left side of the flowchart. So the idea, daily profile away from a 1-hour, 4-hour key level that forms a higher low today. So all you're going to ask yourself, has a relevant level or reversal point been hit to create the low of day or high of day? If yes, now you're going to ask yourself, does the current daily candle support expansion away from that low of day or key level, right? So if no, then we must have a valid, framework for trading a reversal candle, right? If there isn't, then we skip the day. So let's say there is framework for trading a reversal. Now we go to yes, right? Is the 4-hour expansion candle aligned? If no, then we have to simply wait for a 4-hour open, right? So this is what this shows over here. If you're not aligned with a 4-hour expansion, we simply wait for a new open. Once a new open has occurred, then we go back over here, right? We ask ourselves the same thing. So since it is aligned now, All we need to see is a valid fractal model entry to get on side. Once we have a valid fractal model present, then we can look to trade, right? So let's go back over here. Let's say the daily candle is aligned, right? Then we ask ourselves again, does the 4-hour candle support expansion? If it does not, then we simply wait for open. Let's say we waited for open. Okay, now we're back here. Now we just need a fractal model entry, right, to align ourselves with the 4-hour candle. Once we have that, then we are good to trade, right? So let's say when we hop on the charts, a key level hasn't been hit or a reversal hasn't occurred from a relevant level, right? This is no, right? So we must wait for a key level to be reached. If a key level does not, get reached, or we don't reverse from a key level, then we simply skip the day, right? So let's say a key level has been hit. We're simply going to ask ourselves, does the current 4-hour candle that we're trading within support expansion? If no, we're going to wait for the open. Okay, we wait for the open. We come back to here. Is there a valid fractal model to trade away from aligned with the 4-hour expansion candle? If yes, then we can look for entries.